Hey guys, what's up? This is Eddie coming before you. I wanted to come before you guys to discuss the current state of our real estate market. So, if you guys have been watching the news, you see a lot of information coming out there. So, I wanted to come before you guys to kind of explain what's happening. So, we have a few things going on right now. So, because of the rampant inflation that we're having, we have the government that's trying to bring inflation under control. So, they're doing a couple of things. So, most of you guys have seen in the news that they increased the Fed interest rate 75 basis points. I mean, I don't know when the last time that has happened. So it has changed some things as far as it's had an impact on the mortgage interest rates. So we're seeing now mortgage interest rates approach 6%. You guys can remember a couple of years ago, or a year and a half ago, we were down in the high twos, low twos for some people. So mortgage interest rates have doubled, so that's really putting a crimp in what buyers can afford right now. So you have two things going. You have the mortgage interest rates that have doubled, and you have home prices that have increased 40% over the last 2 years. So those two things coupled together is really driving down demand right now. So if you guys have been listening to my videos, you know that the housing market is all about supply and demand. So we've had very little supply. Before the pandemic, we were between 4 and 5 million homes short. And then when you couple that with the historically low interest rates, man, it just drove prices through the roof. But right now, we see the government trying to bring things back into order. So, because of these increases in the interest rates and because of the increased prices, demand is really starting to hamper off. So that's what that's going to do is that's going to bring things down more so to a normal perspective. At least that's the intent. Now we're seeing inventory increase slightly, and that's mainly due because a lot of buyers are being priced out of the market. They can't afford what they thought they would be able to afford because of the increased prices and the mortgage rate increases. So it's hampering demand. We're going to see more homes come on the market. We're not sure how quickly that's going to happen and how long it's going to take. I mean, you just don't go from being 4 million homes short, to being where you need to be. That doesn't happen very quickly. So that's what's going on right now. So we're definitely seeing a change in the market. We're seeing home prices stabilize a little bit. They aren't coming down. We don't expect to see a crash like we did in 2008. So that if that's what you're hoping on, we just don't see that. Most experts don't see that happening. But what they do see happening is prices starting to stabilize. That's number one. And we're also seeing homes start to stay on the market a little longer. So if you guys can remember earlier this year and last year, man, a home would come on the market one day and it would be gone the next day. Now that still is happening, but it's not happening as pervasive as it used to be. So we're not seeing as many multiple offer scenarios. We don't see those bidding wars that we had been seeing. So things are starting to tamper down a little bit. So what does that mean for you? So if you're a prospective buyer in this market, your credit score is very critical right now. If you still think it's your time to buy, you need to make sure that your credit score is as high as possible so you can get the best possible interest rates right now. So credit score is key. Also your loan type. So if you guys saw my previous video, I talked about 86% of the homes that sold were cash or conventional financing. Cash or conventional financing. So a lot of people don't have the cash. We are seeing a lot of people move from out west and from Florida coming in with a lot of cash offers, but also conventional financing. So those are going to be the premium buyers. So sellers are looking for, if they can't get cash, they want a conventional buyer. So if you increase your credit score, you have a low debt to income ratio, conventional financing is the way to go. So those are things you can do as buyers. From a seller standpoint, you just have to be more realistic right now. So it's not really in your best interest to price your home above market price right now. And you can still be aggressive, but just expect for your home to sit on the market a little while. That's just what's going to happen. So you have to be very strategic about where you put your listing price right now. But anyway, just want to give you guys that quick update to try to make some sense of what you're hearing in the news. If you guys have any further questions for me, if you're thinking about selling your home and you want to see, what you think your home could go for in this market, given the recent changes, just hit me up. I can do a market analysis for you. Also, if you're a buyer, you want to sit down and come up with a strategy to help you be successful in this turbulent market. give me a call. You guys know my phone number is 803-497-7112. That's 803-497-7112. Look forward to hearing from you guys. I hope y'all have a blessed week. All right, bye.